All right, welcome back, guys. We're just gonna go over how to find reversals and bounces in the market. A lot of you guys have trouble with catching the bottom of the market, and also selling too early or too late. So hopefully, finding out where a stock might bounce or reject is gonna help you guys make better decisions in the market. Yeah, we're excited you're here too, man. All right. So yeah, first things first. First thing you guys want to consider is these patterns on the screen right here. These are pretty popular patterns you guys see in the markets all the time. So obviously you guys can see this, double top, head and shoulders, rising wedge, double bottom, and inverse head and shoulders, falling wedges, right? So we can go through each of these and kind of talk about how to trade them. And then we can also go over how to find like the exact levels where stocks might bounce or might top out. So yeah, let's get right to it. So right here on the screen, we have an example of a falling wedge, right? This is on PLTR, right? So you guys can see how this pattern kind of matches up, right? Always use your trend lines to help you. The main thing to watch here is you want to see whenever you can break out of this downtrend, right? So do you guys see how we're kind of zigzagging right here? We're kind of using the bodies and the wicks to find the tops and bottoms to make that trend line. So what you guys are watching for now is a break of this trend line, right? So what a lot of people forget is that they need to also wait for the break of resistance to get in, right? So if we break out of this trend line, and that's not necessarily enough, right? Because even though we did kind of bounce on this level over here, and this level kind of matches up, it wasn't really a strong enough bounce for reversal off that level. So you guys might want to wait for it to break resistance up here, right? If that kind of makes sense. So in this wedge, you want to break this trend line. And then your hope is that you can break resistance and then head upwards to the next resistance point, which on PLTR is right here, 31. Making sense so far, guys? Just let me know in the chat because I don't want to confuse you guys. This is an example of the falling wedge pattern.
Let me do a double top real quick.
Yeah. All right, that's perfect. All right, so right here we have an example of a double top pattern, right? So as this chart suggests, in any type of double top situation, what you guys want to do, we can call it an M shape in the markets, right? So whenever you see maybe just this part being formed, whenever you have something like this in the markets, what you guys want to wait for is the break of that neckline right here, right? This is usually going to be a pretty important resistance point, right? And your hope is that the price action will do something like this, right? It'll come down, maybe bounce a little bit, consolidate, and start heading downwards, right? And wherever the price starts heading downwards, then most likely you're going to see the price end up and bottom out right where that double top started, where that M started, right? So this is a pretty bearish pattern if you break that neckline. So you guys always want to make sure that you are waiting for this neckline to break before you get in, right? So in this chart, yeah, it's Constant's drawing right now. You guys want to wait for the break of support right here, and then you want to take it down to the next support level, right? So this M kind of starts right here, right? So that is the hope. I don't know if the stock's going to go that much lower, especially with futures gapping up. But just an example, if you guys are trading like crypto or Forex or something similar to that, you guys might see this happen a lot more often, right? So first thing to note is that we do have a gap right here.
It's filled.
Yeah, pretty much filled. If it does fall any lower, then our next point is going to be wherever you see the stocks kind of trying to reverse. So that's going to be your next point right there. And we also have down here as a potential level to watch, right? So, and the CEO stock should pretty much mirror what the price has done in the past, right? So it kind of came down, went down, filled that gap. Now, if it comes here, it might bottom out here, bounce up a little bit, reject previous resistance, and go all the way back down to kind of fill that M pattern. right there. So the main thing you guys want to watch for is always confirmation candles, right? So in this trade right here, I personally wouldn't probably get in unless we got until this candle right here. Reason is because we kind of fell through this too quickly, and these candles look like they wanted to push back upwards. So if it got down to here, I would have missed this trade. But obviously, at a rejection of previous support, remember guys, that old support becomes new resistance. If we fall below support and then we reject it again, then anywhere around there is going to be my entry for a quick short, right? You guys can scalp that all the way down. Now, if we fall below this in the morning and we have selling pressure in the markets, I'm taking the stock all the way back down to here, right? Because that was kind of a previous resistance level we had to break through. And that also ended up being a temporary support level. So that's how you guys want to play double tops in the market.
So you're looking for it to break 32.16
32.16. Hold on a second.
or 32.13.
Right. We need also volume confirmation, right? So it's not enough for the price to just fall below it briefly. We need to see the candles close below it, and we see some like considerable selling pressure in that area.
So you think once a gap fills, it's gonna go down much more?
Well, the gap is filled, but I'm saying if we do have a confirmation candle below here, then no matter what happens, I expect the stock to fall all the way back down here if we don't bounce up immediately, right? If it falls down like this all the way down here and I miss that trade, I'm gonna wait for the candles to probably edge back up here before taking another short all the way down there. And rejecting this level is gonna be our confirmation to get in the short position and possibly take the trade down to here. Does that make sense?
Yeah, that makes sense. You're just you're looking for it to break that level, and then short it until about 29.
Right. You might want to get out early, right? So you don't want to, stocks might not always bounce right at support. It might go a bit lower. It might go a bit higher. You don't want to risk getting caught in a bounce, right? Because that's where your contracts really get wrecked because that sentiment changes. So you always want to sell into downward strength because the Greeks are assuming that the contract is going to continue increasing in that direction, that the price is going to keep going down. The second you start consolidating, that's when all the theta traders start winning, the premium sellers, right? You want to be selling on that wave and you want to catch it right there. If you can't catch the very bottom, then sell it like right before. That kind of makes sense.
It's going to build a base like this before it moves up. Yeah.
Right. Yeah, this right here, that's not good for options contracts. That's just, you will lose money in that consolidation.
Let's do heads and shoulders.
Shoulders. There was a good example on ES 4 hour. I think maybe it was 2 hour. I could be wrong. It's not a very good one actually.
I'm just gonna use a scanner if I know. Trash.
Give me 1 second.
I think Baba had one before. This is inverse.
Okay. Yeah, you kind of want to. That's kind of a good example. Qdel had one.
Well, Aqua.
I think Qdel, QDEL. He said he had. Someone
Oh,
said had
okay.
Head and Shoulders. QDEL. Not really. All right. Well, basically, we can explain the concepts. I mean, these are formed on all different time frames, but basically, yeah, this chart kind of explains it. So anytime you have a stock that is showing this kind of pattern, right? If you have a stock showing this kind of pattern ever, you want to be very careful of it because what basically happening, like candle wise, is that we have price pushing up to a certain level, it struggled to clear it, and then it fell down to here, but buyers are able to push it back up here, right? And then on the second wave up from this, on the third wave up, on the third wave up, the buyers couldn't push that price back above that high, right? So this is a sign of weakness in the market. So when buyers couldn't pass this previous high up here, then it's showing the buyers don't have enough strength to take the price all the way up, and the price is expected to continue all the way back down, right back to where it started, right? This type of pattern happens a lot in the market, but KO, yeah, we can check that out.
Yeah, that's one I had.
I guess if we're looking at, it's kind of hard to visualize this one. I guess we can look at that potentially. It's not really as strong just because I'm not seeing a huge price rejection over here. I mean, this looks like it could just continue going upwards. Like this is a pretty significant price rejection because we got candles going up and then fell right off. And then right here is another example of strong price rejection, but I'm not really seeing it here. Maybe a different time frame. I mean, these are not very common.
I see it on Aqua, I think. Yeah. Yeah, right here.
Yeah, that's a better example. This is much better. Right. So there we go. So wherever the points form is not as important as getting in below the neckline and entering the short right here. So if honestly, if the stock loses this level right here, yeah, if it loses that level, it might even head straight back down to here, right? We're gonna visit here first, obviously, because that was a prior resistance, but this is a pretty strong head and shoulders pattern. So I hope you guys see that. Again, a perfect head and shoulders is very uncommon in the markets, but it is important to identify them because sometimes you might see all the signs for a bullish entry, and then all of a sudden everything starts selling off, even though the market's green. It's probably a head and shoulders pattern completing itself, right? A lot of traders see this and they think the same things. A lot of algos see this and they trade the same way. They trade these patterns. This is what we program the algos to do. So just be aware of that. Inverse head and shoulders. This is kind of forming on SPY right now as we speak. This is the opposite of head and shoulders. So it's a bullish variant, right? So basically, right, sellers just cannot push the price down on the second run, right? They were able to push it down here and they won again over here, but this time they were not able to push it down. And whenever you break this pattern, then you are expected to continue upwards to your initial entry or wherever the neckline might have started, right? So SPY, right, so I think SPY might be forming a bit of an inverse head and shoulder. We'll see what happens. Yeah, I was looking on the right here. So on the 2 hours, good.
You do 2 hours? Okay, I'm saying.
Yeah. Right. So this is a right here. Let me draw it. Right. So we could be forming an inverse head and shoulder, which is why it's very important that we actually can find support anywhere above this level. Otherwise, SPY might just actually fall all the way back down to this 365 level, right? That kind of makes sense. So I'm hoping that this is an inverse head and shoulder pattern. Once we come up here with the price and we can kind of follow this pattern, if we find support anywhere above this level right here, then this will be a confirmed inverse head and shoulders, and we will be pushing to all-time highs almost immediately, right? That's going to be the beginning. This is the first shoulder. This is the head right here. Hopefully, we're aiming to find another head here, and then whatever happens up until all-time highs to 400 and beyond. So that's how I'm going to be trading SPY. So I guess it kind of helps. On the bearish side, SPY can always reject anywhere around here and continue downwards towards that line. So that's an example of inverse head and shoulders. What else do we have? Rising wedge, CPX. This is a good double bottom play, actually.
Wow.
Yeah. So enter right here. Take profits at this level over there, wherever that leads us to, right? You guys see how we found support on that level again, and we're able to bounce again, right? So I hope that's making sense to you guys so far. So we went over double top, double bottom, head and shoulders, inverse. We saw a falling wedge. So now we're looking for a rising wedge. Okay. There's a rising wedge in, I think, Wix, WIX. Maybe it's not rising anymore.
I'll just use a ticker. Wedge up. I got one. AMG.
No, very cool.
Oh, no, not the best one.
Gotcha.
CWI.
Hey, Nightshade. Do you
What's
think
up?
news breaks patterns?
News is one of the few things that does break patterns, yes.
Okay,
Yeah.
thank you.
Sure. All right, this one's kind of expanding. It's not the best example of a rising wedge, but the idea is, guys, that you want to basically be looking for any type of zigzag pattern, right? So you want to look for an upwards trend, and then whenever it's broken, right? So that would be your break point right there. You want to take it down to the next support levels, right? So usually whenever stocks fall out of a rising wedge channel, they do tend to fall. So your bearish sentiment can increase, and you can probably take this down to the next support level. And yeah, there you go. That's kind of how you want to trade this. That's going to be your next support level right there. So you guys just don't want to overcomplicate it. You know, if you don't see a pattern that clearly, don't try and force it. That's a much better. Yeah, that's a great example of rising wedge, right? The price is trending upwards. All of a sudden, we start consolidating, forming a wedge, which means the price is tightening.
Double
So whenever
bottom.
we see the price doing this, right, then IRA is going to go upwards or downwards, right? So you guys want to take it down whenever you break that trend line. So that's kind of how you guys trade that. So that's how you find reversals on the market. A lot of these take days to form. If you're in long swing trades or leaps, these are kind of what you guys want to look for. These little patterns, and then always make a trend line and set an alert for whenever any candle crosses below or above a trend line. That's important in your pattern, right? You guys can use finviz.com. The screener there is free. Go to a technical tab, and you guys can check for all of these patterns here: rising wedge, wedge up, wedge down. Yeah, all this stuff right here. It will find tickers for you. All you guys have to do is click on charts. You can sort it by market caps. You can find stocks that have better options contracts like Facebook, Apple, Amazon, etc. It can find all of these for you, and then it's up to you to actually pull up a chart and confirm these patterns and see if it's worth a trade, right? If you have a bearish chart pattern on a stock that you're holding, it might be time to take profits unless it's a long-term hold like Coca-Cola, Disney, Apple, stuff like that. So
Does it mean anything if it's a wedge that's like that's just not like moving up or down? It's just like staying at the same level. Does that mean it?
that wouldn't be a wedge, that'd be more of a price channel. So you might be talking about if the stock is just ranging like this and going up and down. Is that what you mean?
Yeah, pretty much, yeah.
Right. So at that point, every time you bounce, you actually are going to have a stronger breakout to whichever side it breaks out of, right? You just want to be careful not to get caught in false breakouts, right? because the more stocks will bounce or reject a level, the more likely it is to reverse at those levels. So you need to have a pretty strong breakout to confirm that you are indeed changing direction or picking a direction. Yeah, it's a pretty good example of something
So
ranging, right?
when it gets
So
reject, oh sorry.
it's a
When
pretty
it
good
gets
example right here. Yeah, go ahead.
when it gets rejected, does that make the line stronger or just more likely to reverse?
It makes it, well, that's what gives the line strength, right? If you reverse at a level, that's what's giving your line strength, and that's what makes your level more relevant, right? So right here we have an example of something that's kind of ranging. I mean, this could be a price channel as well, but it is, I guess, more of a very weak falling wedge. So this is expected to break upwards, but given that we just went straight up, 4 green candles in a row, we might actually reject this level and get shot back down. I don't know. Right here would be a good level for a breakout, because we kind of rejected this level and we came right back up trying to test it again, but it did get smacked back down, right? So now this buyer stepping in, trying again to push it upwards. I personally don't think this is going to break out tomorrow, just because it might be a bit exhausted in momentum, but TTM squeeze is showing that it is ready to make a big move upwards, right? So it's possible that we actually shoot up and reject 30.44, which is this level right here. You guys check, we rejected it a few times right there. Same kind of thing, right? Same kind of ranging. We broke out, we broke it down, right? So we'll see how this continues to react. But that's kind of the idea. That's kind of how you want to play these types of tickers. All right, let me check the chat. Any questions? CVX. Yes, we are recording this.
Chart SQ.
All right, so here's an example of yeah, this looks ready to reverse, right? So every time we have a long wick on square, we do seem to reverse big time. Yep, that's when that one didn't really work out until later. Right, so I would say on square, what you want to do for this double bottom, not really, because we don't really have a neckline. A double bottom would have to have the price start higher and then go up, so that would be your entry right there. But on square, we did bottom twice, but our price only started right around here, so that's why I wouldn't consider it double bottom. This actually could be a head and shoulders forming.
Nightshade, do you mind posting all of those like all those I don't know what it's called, all those patterns that you had up on the screen?
They are in Discord. They're under the education tab.
Okay.
I'm not sure who's talking right now, but I will just send me a DM and I will show you the tab to look at.
All right, thank you.
Yep. So yeah, every time square is touching this level, it tends to reverse pretty strongly. So this kind of ties into how we find bounces in the market, right? This is more of a reversal pattern because we've already bounced heavily off this level, off that 618 fib line that was drawn perfectly. So since we have such a long wick, this is showing a huge price rejection, right? So if you have a candle with a huge wick on any large time frame, this is where price does not want to be, right? Anywhere on this wick, price does not want to be. So it means we opened, so let's draw it again, right? We opened around here and sellers pushed the price all the way down here, right? And then buyers stepped back in and pushed it all the way up there, right? So even though that candle couldn't close green, it's still a very, very bullish candle because it's showing that the price does not want to stay anywhere below its closing price, right? So I think this close, I'm not sure what that was. Yeah, 216.44.
Mm-hmm.
So I do expect square to continue upwards, right? It should look very aggressive just like this. And given that tech has gapped up, or all futures for that matter, have gapped up, then we do have a pretty strong probability of heading upwards very soon, right? And obviously using the rules, you guys definitely don't want to get into square until we break resistance, right? So just looking at the daily chart, we have resistance at 231 to 245-ish, whatever that is. That's a pretty big range, especially as options traders. So this is the point where you want to look at smaller time frames, right? So yeah, you can check anything, check 15-minute, 30-minute, anything like that. And now you guys have a clearer picture of what levels to watch, right? So the very first thing I'm watching is right there, right? 221.5. Now the reason we chose that level and we didn't go back in time to find other things is because very simply, this level was our old support temporarily, our most recent support, bounced right off, and then it broke down. However, we were able to find resistance there in the morning until it then broke down again, right? And we consolidated around here. So this is proof that this line is a perfect line for reversal. And these lines are the ones you want to look for whenever you want to find where market might bounce, right? Because things can find support at certain levels, but they might not always bounce strongly. The way to tell if something will bounce is to always look at the most recent price action. Look how the price most recently reacted to that level and use that to make a better decision about the market going forward, right? So if Square can break 221.5, what am I looking for? Well, I want to break this level with confidence. I want to see a big green candle over that. And if we retrace, I need to bounce anywhere above that 221.5 level, right? Whatever happens after there, I don't really care because we're going to be good, right? We can break resistance right here. If we break that, we're going to the moon, right? And we'll see this level, and then we'll see that level, and then there, and so on, right? If we break through this level and we come back down, we can either short it or just stay away, right? Because at that point, we might be trying to scoop back up and consolidate and fail. We might just fail altogether, or we might just go up and then go down. It might shoot up again, but you guys don't want to take those risky trades. Your best bet is to always wait for it to find support at that line you've drawn, right? That will give you confidence that the line you drew is indeed significant, and that will avoid or prevent you guys from just gambling and trying to guess if buyers just failed that one time, but are going to step in next time, right? Obviously, you can use volume and other indicators to help you confirm that price action, but that is not, you guys want to be careful, manage your risk. So anything above 222 in the morning should be good for Square to go. 222 with green volume, we're good to go. At this rate, we might open higher. Tesla, so we bounced here pretty aggressively. It's quite clear that Tesla does need to pass 601, right? 600.9, same thing. So we bounced off at level twice, and now we found resistance at that level, right? The only thing that makes this tricky is that we are gapped up in futures. So that means that we have we are going to open higher than this most likely if futures hold, which I do think they will. So if futures continue to run up, then I think Tesla might open anywhere in this range, right? If we open higher than 625, I want to either find support at 625 in the morning, right? Or I want to find support at 601 and then bounce up and probably reject 625 and go for a long entry upwards, right? If we open between 601 and 625, then we are probably just going to flush if the market does go down, at which point we're back to square one. We have to find a bounce right there, or God forbid down here and all the way down here, right? So like I keep saying, you guys want to make sure that you bounce off your previous resistance for it to be a good level. As far as levels for Tesla go, I'm still not ready to call long on the stock right now. It is massively oversold, yes, but until we can we need some more candles for me to make a decision on this. There's really not much going on. Will it continue upwards? Yes, I think so. So if you have shares, I would say yes, you have a good entry. But yeah, for options, I'd be careful. That it's a nice long wick, but we do have stimulus coming. You don't want to get caught up in any sudden sell-offs because overvalued stocks like Tesla will be the ones to go first, right? cool. Yeah, it's kind of broke down. Yeah, any other tickets you guys want to see?
This thing
That's
is
congrats.
on,
Oh, what was that? Go ahead.
it's on sale.
Yeah, for real. Yeah, you guys always want to take advantage of these days, whenever you have, or these weeks, whenever stocks sell off massively. You know, that's why you always want to have hedges and cash in place. You know, when your hedges start paying off, you want to take the money from the hedges and put it into place, that kind of stuff, right? So it's pretty obvious from the chart that we are going to reverse here, at least temporarily. If this wants to continue downwards, sure, it might, but it will bounce upwards, right? Because that is a very significant pivot point, right? So I do think we are going to bounce here. Now, whether we continue upwards, that's a different story. But just for right now, we are going to bounce up in the morning. And then whatever happens after, we can continue going up like this, or we might bounce and reject and head all the way back down, right? It's either direction. But we don't need to know where it's going just yet. Just play the levels and play what the market gives you. All right, QS. I'm actually playing QS personally. I have a couple contracts to swing with that, or more than a couple. Yeah, so we still have this gap to fill, right? Right there. Yeah, QS really needs to hold above 50, 57 or 58, somewhere around there. I do think we're going to get a nice strong bounce up. QS is one of those stocks that does have the potential to do like 10 to 20% days. I've seen it do it before, especially in this run up, right? If it fills this gap, it might even run all the way up to 120. It's possible. But for right now, just pay attention to this reversal right here. I do think we're going to have a pretty big green candle there in the morning, and we'll see where it takes us, right? Remember, whenever we pass this 56.7 level, our object or the aim is to have our stock bounced up here, right? What's the question? Is it better to sell on the 10% days because the IV will be jacked? Absolutely, right? So the IV is going to get jacked. IV means implied volatility, for those of you who don't know. It will be jacked whenever it starts moving quickly. QS is a stock that has, you know, just a few months ago, it started running up 10, 20% every day. So yeah, you want to sell into uptrend, right? You don't want to get caught in the consolidation like I was saying earlier. If it does a 10% day and your contracts are expiring on March 19th, just get rid of it, right? It's always better to take the profits, put some in 416 contracts or even July, September. You know, if you have long expiration, just trim your position. If you only have one, you know, set your targets and get rid of it. It's always better to just walk away with guaranteed cash and try to just trying to salvage everything you can. You know, I know it's a bad feeling whenever you sell something and then the next day or next hour it goes up another 15%, but it's always going to be a worse if you just lose money. That's my advice to you. But yeah, QS is a gap to fill, has a few hurdles to cross, like I said. That 57, watch it closely in the morning. Like I said, we did gap up, so you know things might be pointing downwards short term, at least in the first hour of the market. It's going to be a little rough. I think tomorrow might look very similar to Friday, but only time will tell. Yeah, most stocks I have the same comment for. We are going to gap up and futures hold, and then we're going to start a massive bull rally at some point. I'm just not sure if tomorrow is the day necessarily. So, yeah.